In this video, I'm going to share with you the things that I really wish I knew and understood before I started trading in stocks and options. These tips would have helped me be more profitable and less stressed out as a trader and investor. These tips would have saved me many thousands of dollars. And I encourage you to watch until the very end of this video, because at the very end, I'm going to give you a bonus tip that, in my opinion, is actually the most important one. So in no particular order, here are my top tips that I wish I knew and understood before I started trading in stocks and options. There are all kinds of opinions on diversification. Some very mature and successful traders say that diversification is a bad idea. Others say that diversification is extremely important. I'm just going to tell you that there have been times in my trading career when I was not diversified. I had, for example, saved 40 to 50% of my portfolio in just one position. Many times it went well, but to be frank with you, I don't really remember those times that went well, because what I really remember is that several times they went against me in a really big way. Look, things are just going to happen to companies that we trade in. There's no way for us to know when some lawsuit, product recall, or external market situation like a pandemic or a war might occur that will have a harmful effect on our otherwise profitable company. Another way to diversify is to enter or build trades and positions slowly. For example, in our portfolio, we want a maximum position size of 5% in any one position. However, many times our full position size will actually be around 2 to 3%. That gives an additional 2 to 3% to play with if the position goes against us. But even in that initial 2 to 3% position size, I generally enter those positions slowly over time. I'll sell a put option or two today. If the turn is still good and the stock is still finding nice support, I'll add to it the next day. If on the third day the stock begins to show weakness, then I'll pause with adding any more to that position size. However, if it continues to look good and we have capital available, then I'll continue adding to the position until we reach that 2 to 3% position size. I know some of you have smaller accounts, and so a 2 to 5% position size, it might be difficult or maybe even impossible. If that's the case, you just need to decide for yourself how much you're going to have at risk in each position. And remember to be as diversified as possible. In my main ops trading account, I like to keep a very diversified portfolio. Typically in our main ops trading account, we'll have anywhere from 30 to 40 positions on in various companies. Those companies are in different industries, and therefore they give us varied volatility exposure. Some of those companies and industries, they are more volatile than some of the others. I like to have a mix because I found that certain industries and sectors, they do better in different types of market environments. My next tip is one that I know is wise because one of the smartest people of all time alluded to it. Albert Einstein once said, "Everything should be made as simple as possible, but not simpler." What did he mean by that? Einstein was saying that it was desirable to keep even complex things as simple as possible. If you have a position with 10 legs, I'm sorry, but it's going to be very difficult and complicated to get out of that position. I have found in trading as well as business that sometimes the smartest people, they think their way right out of business. There are a lot of things that we can do to make what we do complicated and confusing. Our goal should be to make things as simple and clear as possible. Have a trading strategy that is simple and allows you to make quick, clear, and well thought out decisions. On top of that, if you're having to get out of a position and it's extremely complicated, the cost of trading commissions, slippage, and possible execution areas, well, they will all increase the more complicated a position is. If you find yourself in a position that's complicated, you know that you'll have to exit in the coming days, simplify the position as much as possible leading up to that final day. That way it won't be a really stressful, confusing, and challenging day for you. Don't wait until the very last possible minute. This will help you to avoid stress, give you time to execute your orders at better fill prices, and increase the odds of you exiting the position at your optimal price. But if at all possible, don't let it get that complicated to begin with. The next tip is one that requires almost superhuman abilities for some of us traders. And that's because it goes against the very character of many successful traders' personalities. However, this tip is vital for you to possess if you want to be a successful long-term trader. Have you ever heard the saying, patience is a virtue? Do you know what that means? One possible meaning is that if you are a patient trader, you have the ability to wait for whatever it is that you're trying to accomplish. As a trader, being patient is important in many different aspects. For example, it's important that a new trader with a small account, that they be patient in growing their account size. I can't tell you how many times I come across traders with a small account, say for example, a $30,000 account, yet they're acting as if they have a $300,000 account. It's important to allow time for your account size to grow. Don't focus on the dollar amount. Focus on becoming a more consistent, profitable option or stock trader. If you do that, then financial success, it will come. On the contrary, if you focus on only trying to do trades that will dramatically increase your account balance, typically those trades are going to go against you, and the complete opposite of what you're trying to accomplish is what's going to happen. Don't force trades. Don't use a ton of margin or leverage. Another form of patience is important when entering trades. For example, we really try to make sure that we're entering trades when we have good odds of winning on that position. It takes a lot of time for me every day to review all my potential trades, run returns, and double check that to make sure that it still is advantageous for us to enter the position before finally getting around to actually placing the order. Every day I review a lot of potential stocks. I'm looking for the ones that are entering our sweet spot. Once I narrow that down to anywhere from 5 to 10 potential trades, I then run those returns. Then I look at the potential stocks charts on up to 4 different time frames. If all that looks good, then I enter the order. There are absolutely times when I will miss a trade by 30 minutes because of this process. However, I'm okay with that. If a position moves away from you so that you won't get a good enough price, be patient. Set your limit order and let the order just sit out there just to see what happens. If it doesn't get filled, then just look for other opportunities. If neither one of those are possible, then I promise there will be another potential trade later. Don't force a trade at an undesirable price just because you're impatient and because you want to make a trade. Another form of patience comes from wanting to be a better trader. It takes time, education, association with other traders, and learning from your mistakes to become a top-tier trader. None of that happens overnight. Being a part of a group of traders will definitely accelerate your growth curve. If you would like to associate with a group of positive-minded traders that are trying to become better every day, consider becoming a patron down at the link in the description below. A final aspect of patience that is required to be successful is learning how your account and you mentally will respond to various market scenarios. Here on YouTube and in my Patreon group, as well as other places that I meet traders, I find that many traders that are very new to this business, they've never experienced a dramatic downturn. It's important to trade each day as if tomorrow there will be a market crash. Until you experience one, you just don't know how you're going to respond in that situation. Keep your position size small until you have experienced multiple market conditions, good and bad. The next tip applies to all stock and option traders, but if you're using any kind of margin or leverage, it applies to you times 100. It's short and powerful. I got this out of a book that I read many years ago. The market can stay irrational longer than you can stay solvent. You must plan for the worst case scenario on every trade. Do not enter trades in positions that can put you out of business if they go against you. You could be 100% right in your position, but if the market disagrees with you and you're using too much leverage or margin, it can put you right out of business. If it doesn't happen this time, eventually it will if you're using too much margin or leverage. To me, probably the hardest and yet the most important thing to learn in trading is not how to read a chart. It's not how to pick a company with the best fundamentals. In my opinion, the hardest and yet most important thing to learn as a stock and option trader is how to control your emotions of fear and greed. It's vital that you learn to sense when those emotions are starting to sneak up on you and influencing your decisions. As soon as you sense that either one of those emotions are affecting you, even to the smallest degree, take a break, walk away, and give your head time to reset. Mistakes come from making decisions that are based on fear and greed. If you'd like to receive alerts when we do trades, consider the benefits of becoming a Patreon down at the link in the description below. If you really want to take your stock and option trading up to the next level, what I mentioned in this video, it isn't enough all by itself. There's actually one more thing that when combined with the tips that I share with you in this video, it'll help you to become an elite trader. I share exactly what that is in the video at the link above, because it's going to take what you've just learned and make it 10 times more powerful, okay? Maybe 20 times. So please check that video out. Until next time, happy investing, and we'll see you again soon.